Imagine a business where people pay you $10 a month for nothing. That's pretty much the Planet Fitness business model. And with millions of paying members, most of whom never even show up, you might expect Planet Fitness to be a cash cow. And to some degree, you'd be right. Nevertheless, I actually wouldn't buy a Planet Fitness franchise today. And in this video, I'm going to walk through why that is, what we can learn from the story of Planet Fitness, and where I would invest my money in the fitness industry in 2025. And if you're new here, my name is Connor Gross. I'm a multi-brand franchise owner, and I also help aspiring franchise owners to find the right franchise for them. For access to my library of free resources or to book a free strategy call with me, click the link in the description. Let's go back to the early 1990s, when two brothers, Michael and Mark Grondal, bought a struggling gym in New Hampshire. At that time, the fitness industry was dominated by intimidating, hardcore bodybuilding environments, packed with heavy lifters and complex equipment. The Grondals realized something important. Most people who join a gym or wanted to join a gym, they weren't professional athletes or they weren't fitness fanatics. They were just regular folks looking for a welcoming place to get healthier.
Hulk out with your bulk out, bros.
So in 1992, they rebranded their small club as Planet Fitness. Their mission was simple. It was to create a judgment-free, approachable gym that felt like the opposite of the intimidating spaces that most people were used to. That's how the now famous Judgement Free Zone slogan was born. And from there, Planet Fitness leaned into a quirky and clever strategy, because instead of competing with other gyms, they declared that their real competition was the couch. Their goal wasn't to pull diehard gym rats away from the hardcore fitness centers. It was to get the millions of people who were sitting at home to feel comfortable walking into a gym for the very first time. And that philosophy shaped everything, from the affordable $10 a month memberships, the beginner-friendly equipment, and the lunk alarm that famously calls out intimidating gym behavior, like whenever somebody grunts or they drop weights, an alarm sounds in the gym. And they even have free pizza nights. And yes, that's free pizza in a gym, which sounds counterintuitive to me, but it was their way of saying, relax, you don't have to be perfect to belong here. And so as word spread, Planet Fitness grew rapidly. And in 2003, they opened their first franchise location, which kicked off a business model that would fuel explosive expansion. By focusing on consistency, affordability, and that judgment-free identity, Planet Fitness became one of the fastest growing fitness franchises in the world. And it certainly paid off for franchisees, because many successful franchisees scaled by building out multiple locations and consolidating through acquisition, many of which brought in private equity capital to catalyze their growth. And today, the top 5 franchisees in Planet Fitness own over 500 locations collectively. And remember, these are big businesses. Another interesting part of the Planet Fitness story is that after they went public in 2015, they began using their corporate balance sheet to buy out franchisees. So the franchisees got to sell to a publicly traded giant for presumably more money than they would have gotten from any other buyer. And then for Planet Fitness corporate, it was also a win, because the earnings from the franchisees they acquired were valued at a higher multiple once it was combined with their larger business. Today, there are thousands of locations across the US and internationally with tens of millions of members. And so what started as a single struggling gym in New Hampshire turned into a global fitness brand by flipping the script on what a gym should be. And what's most interesting is that Planet Fitness didn't succeed by chasing the fittest 10% of people who already live in the gym. Instead, they built a business empire by focusing on the 90% who were too intimidated to even walk through the door. So the story of Planet Fitness is a story of entrepreneurial brilliance, acknowledging what the market demanded that nobody else was offering at that time. But remember, that time was in the 1990s, the early 2000s, and looking ahead to the rest of this decade and beyond, it's not the franchise that I would be investing in right now, and here's why. The first reason, right off the bat, is the huge capital requirements. Because when I think about Planet Fitness franchises, their locations, I think about how big it is. These are not small gyms, and they often require 10 to 20,000 square feet and startup costs ranging from 1.5 million all the way to over 4 million per locations. Now, as you've heard me say before, a larger investment size shouldn't always be a deal breaker when considering a franchise, but it does raise the standard of financial performance between the free cash flow, the enterprise value you need to see to be able to justify this investment. But here's the other thing, is it's not just the amount of capital that's needed, but also the time value of money. If you need to find 10 to 20,000 square feet of a piece of real estate, first of all, that might take you a year to find the right space. Then you might have to wait a year for the existing tenant's lease to expire or for the real estate to be finished if it's a new property. And then you have the time for the build out before you can open. You're talking about a period of potentially 2 to 3 years before you even see your first dollar of revenue, and you have to consider the opportunity cost of that capital as the legitimate cost that it is. And so for myself and probably most investors, this would be a significant investment for us, and that's a massive amount of our personal net worth that's tied up into one facility before a single dollar of revenue comes in. So the second thing to think about is the low pricing strategy. And as we've talked about, Planet Fitness memberships are cheap, and that's the entire draw. And whenever you're the budget option with any product or service, it means that you're dealing with the most price-sensitive segment of the market, and often the least committed segment of the market as well, certainly the case with Planet Fitness. As we talked about, this was an intentional maneuver on their part. They intentionally sought to attract people who weren't otherwise dedicated to their fitness, and taking the road less traveled paid off for them in building an incredible brand in the fitness space, but I don't think this is the road that is the best way to build the most enduring brand in the coming decades, because when your price is low as Planet Fitness is, and therefore you need as much volume as Planet Fitness does, it's mission critical to their business that most of their customers do not show up. Because if everybody who had a Planet Fitness membership showed up, they literally would not be able to operate because there isn't enough space. And so here I could make a nasty joke about the size of the typical Planet Fitness member and how, much space they tend to operate, but I'm a nice person and I'm not going to do that. So obviously by saying there's not enough space, I'm obviously talking about the number of people, right? But anyway, with this constraint in mind, and given how most people aren't going to intentionally pay for something on a monthly basis that they have no intention of using, Planet Fitness is very reliant on people forgetting they even have the membership. And this is what really bugs me about the business model, because in any membership business, the monthly churn, or the percentage of members that cancel on a monthly basis, that's a key metric to understand the health and longevity of that business. And in my opinion, the best business models focus on, when they're trying to reduce churn, is they focus on adding more value to customers so that the customers have no desire to leave. But what Planet Fitness does, in addition to keeping their prices low so it's easier for them to fly under the radar, is they add friction to the process of canceling. Up until recently, to cancel a Planet Fitness membership, you had to physically walk into a Planet Fitness location to cancel. And in 2024, the FTC outlined their plans to enforce what they are calling a click-to-cancel policy, which essentially mandates that if you allow people to purchase the subscription online, you have to allow them to cancel the subscription online as well. And they haven't formally enforced this policy quite yet, but Planet Fitness voluntarily changed their own policy in May of 2025, allowing customers to cancel online. And it's too early quite yet to know exactly what the impact that it will have on Planet Fitness's model, but the point is that whenever customers stick around a business for a reason other than their desire to do so because they love it so much, it doesn't give me comfort as a business owner about the long-term stability of that business. And that brings me to point number 3, which is what I'm calling the Ozempic Effect. And this is probably my greatest concern about Planet Fitness's business model long-term. Their self-identified competition is the couch. Their marketing sells a dream or an idea to people who are on their couches but have this dream they want to be in better shape. As far as Planet Fitness is concerned, when they buy the membership, whether they follow through on it is really none of their concern. The competition with the couch has gotten more competitive over the last few years, if you've been paying attention, because Ozempic and other GLP-1 weight loss drugs are now competing for the same customer, right? If somebody isn't fitness focused and never has been, but they have a dream of losing weight, what sounds more attractive to them? Like option 1, you can pay for this gym membership where I have to go and work to lose weight, and in the back of their mind, they probably know that they're not going to actually follow through on that. Or option 2, they pay for this drug that allows me to get my desired outcome without the same level of uncomfortable input. And I think that the option there would be pretty clear that option 2 would be more attractive to that target market. And I do want to clarify that despite the emergence of these weight loss drugs, I'm still very bullish on fitness as an industry long term, because the weight loss is only part of the reason that people spend money on fitness. There's also the strength training, other health benefits, physical health benefits, and then also mental health benefits. And then many people do it for their community and they do it to make friends. The point is that if their only concern is losing weight, that's where Ozempic or other GLP-1s can be a substitute. Nobody who loves yoga or loves Pilates for their mental health is going to hear about Ozempic and say, well, I guess I don't need to do yoga anymore. Somebody who is out of shape and making a New Year's resolution to lose weight would be more inclined to buy the drugs instead of buying a Planet Fitness membership. Again, know that they aren't going to use. If you followed me for a while, you may know that in addition to owning my own franchises and creating content about franchising, I also help people to find, evaluate, and fund franchise opportunities. So if you have at least $100,000 of liquid capital to invest and you're ready to move forward within the next 3 months, provided that you find the right opportunity, you can click the link in the description to book a free strategy call with me to get started. Little preview here. If you're thinking about investing in fitness, Planet Fitness is not going to be my choice, as you've heard, for the reasons I've outlined. I'm focused on more niche boutique fitness opportunities for several reasons. First of all, again, hitting the build-out costs, the startup capital that's needed. Boutique niche fitness opportunities tend to have more reasonable build-out costs because you need less square footage because it's niche, right? Typically, I look for somewhere between a $300,000 to an $800,000 investment per unit. And then as always, you have to pay attention to the financial performance to ensure that they make enough money to justify that investment, even though it's a lower investment relative to a big box gym like Planet Fitness. The second thing I like about boutique niche fitness opportunities is the higher price point, because this often is going to lead to better margins and more loyal customers who are loyal because they want to stay there, not because there's just so much friction in the cancellation process that they don't want to deal with. And then I also look for other benefits besides weight loss, whether that is strength training or physical health or mental health or community. Quick note on community that you might have heard me say before: when you're evaluating a fitness franchise, franchise, pay attention to the gear. Do they have merchandise that looks great from a branding standpoint? And do members wear the gear around, repping the brand like it's a sports team? Because if anybody is that excited about your brand, they're excited enough to do your advertising for you on the clothes that they wear, that's a strong indication that no pharmaceutical product is going to disrupt that. As always, I hope this was helpful to you in your franchise journey. Please be sure to subscribe to this channel so you don't miss more franchise content, and leave me a comment letting me know what franchise you'd like to hear more about next.